Hi, everyone. This is Chris Kimble, and welcome to your Daily Five. Today's March the 16th, and I'll do an early welcoming you to the first day of spring. Today, I wanted to highlight several commodities and talk about the inflation theme and is it coming back, and maybe how today could really help you with some of these things. So, one of the things we wanted to discuss is crude oil's up 130% in the past 50 weeks. I know that's a huge rally. There isn't any reason that is. It should be a bull market, right? But we'll discuss today, is it really in a long-term bull or bear market? Also talk about some really high correlations between crude oil and emerging markets, since crude oil is at an important price point. And I want to talk about Dr. Copper and interest rates. They're testing some long-term breakout levels. And so this all has to do with, the inflation theme, and are we going to get this? And maybe it'll help us all have a determination on global growth. And we're all, as Rachel and I were talking about, getting our shots. We're kind of getting our lives back to some normalcy. So one of the things that was, I think, very abnormal a year ago. This is my 43rd year in the business, and I thought one thing was interesting. I was talking with another friend a year ago on the phone that he had been in the business 40 years, and as we're on the phone, that given day, crude oil was like at $5 a barrel. And as we were just on the phone, all of a sudden it's at $0. And the next thing we know, it's below zero, $10, 20, 30, 40, $50 below zero. And we all know that was those people in the futures markets, they didn't have any place to put the oil. So they were just selling it at any time of a loss. And so this is that decline. This is the 50-week rate of change that you can see the crude oil was a negative 50. And so that's this big spike down. But what a difference a year makes. So I think a year later, for so many of us, thank goodness, maybe the pandemic, the majority of it's in the rearview mirror. But crude oil was up as much as 200% just a couple of weeks ago, and currently it's up 130% in the last 50 weeks. And so I know when it comes to the stock market, if the market's down 10%, what's the term used? What's in a correction? If it's down 20, we're now in a bear market. So why wouldn't crude oil be in a bull market if it's up 130%? And so it sure is over the last year. But I want to kind of take a longer look at this. And so this is crude oil, going back just short of 2 decades. And I turned this to a monthly closing chart, and with that, it gets this huge spike out of here of this negative $50 a barrel for crude. And so you can see that it closed essentially last March at about $20 after all the dust settled. But it closed back here in 2008 at 140. So a couple of things I want you to take notice of: that we have this high, in 2008, a lower high in 13. It came near it in 2018, and we're at it right now. But we're also on this monthly closing basis. Crude oil is testing its Fibonacci 38% retracement level. So as most of us are probably paying a little bit more at the gas pump. I've tried to tell people from Kansas, so sometimes our gas prices are lower than the coast, but I try to tell friends that it's probably better to pay $3 a gallon than $2, because at $3 our economy is stronger, and at $2 it's probably weaker. Tax revenues for a lot of states are down. So we have a big test of lower highs taking place plus a Fibonacci ratio. So we know this chart, we're going to look at emerging markets again over the last 20 years. And if you were unfortunate almost 14 years ago to buy emerging markets, it's just been dead money. As you can see, in 2007, it was essentially at $55 a share. And where are we today? So the reason I want to try to tie crude oil and what's crude oil and emerging markets have to do with each other is that a lot of the emerging markets countries, as most of you know, are natural resource based, and some of them, a lot of their revenue stream has to do with crude oil. And so growth of these emerging countries, they would love to see that crude oil break out from that prior chart. So I wanted to share on this next chart. You can see it's testing these old highs right up here at $55. So this looks like a busy chart, but I just kind of wanted to overlay then the first 2 charts together. So we have crude oil on top, we have the emerging markets on the bottom, and you can see that when crude oil peaked in 2008, emerging markets did as well. It had a lower high, and so at both at this time in this red shaded area for in less than a year. Both fell over 60% during that time frame. There was a high degree of correlation. But you can see on the flip side, then when crude oil bottomed, you can see as it traded up for years, so did emerging markets. Well, then crude oil struggled up here around $100 a barrel once, twice, three, and then the fourth time. Then it rolls over from $100 and it rolls clear down to 20. So at the same time, then what's emerging markets do? It's impacted by this decline. Then they rise together again. So I think this is one of the larger influences or confluences of long-term price points. And so I think we're going to find a lot about the inflation and growth story by what crude oil and emerging markets does at this price point. And so there's a lot of discussion on interest rates and different things, but I want to take this a step further. This is the S&P 500, the S&P 500 sectors, excuse me, and the performance over the last 5 years. And you'll just see one red number, and it was the XLE, which is the energy stocks. And so despite this big run up, energy is still below water 5 years later. And so XLE is at an important price point. You can see essentially at the $55 range, it was support 2016, support in 2018. And then once that support broke, we went from the 50s down to the low 20s. Now we've had a counter trend rally. So it's now testing essentially 9-year, what was support is resistance. It's also at its 38% retracement level, similar to crude oil in an earlier chart, with momentum the highest since the 2014 highs. So another large inflection point that will give us some answers on this growth and inflation story. Steel is a major growth component, not so much of emerging markets, but it says kind of how we're doing. And this is SLX, the steel ETF on a monthly basis. And you can see here was a resistance back in 2012, resistance in 14 again, resistance in 17, 18 again. And so it's testing its 38% retracement level of the 2008 high and the 2016 lows, as momentum is extremely high. So you're gonna want to keep an opportunity on what steel is looking at. Let's turn to copper. This is a long-term chart, almost the last 15 years of copper on a weekly basis. And you can see this is where it's double, triple topped in 2011 at around 450, fell over 50% down to 2. And then we've seen a series of higher lows. And then from essentially 1 year ago, from the pandemic's lows or the extreme and pessimism, we've seen this really sharp rally, which has pushed momentum to the highest in 20 years. It's testing its 2011 highs, as well as what was support here and support and resistance. So another potential inflection point. So when we start putting a lot of these pieces together, where it's the energy chart at first, EEM, where we combine that, we're looking at steel, we're looking at energy charts. You know, interest rates, obviously, you know, we started off with the chicken or just talked about the chicken or the egg, essentially, which one comes first. You know, we're in a world of high correlation, but you know, this is interest rates. This is a 30-year yield, but you can see in 2008 it bottomed around 250. Again in 2012 it broke below that for a little in 2014, a little in 2016. Then once it broke below it, it came back and then tested old support as new resistance, and then interest rates collapsed. And now we've seen this historic rise in rates back up to the 250 level as interest rates are testing or is momentum on a weekly basis is now extremely high. So as we wrap up today, we can see that crude oil is up a lot and it's testing a long-term resistance point. It's in a short-term bull market, but a long-term bear market as far as higher lows. Crude oil and emerging are both testing, or emerging markets, excuse me, is clear back to its 2007 highs. Copper and interest rates and XLE are testing, you know, key breakout levels, you know, as well. So we're at a really key point that if we want the global theme to continue to go, we want to see breakouts in all of these. The global theme would probably change, obviously, if we start seeing some selling pressure here. So I want to make you aware of these long-term trends. So thank you again for joining us on your Daily 5. We have a 40% offer for StockCharts members. You can go to kimblechartingsolutions.com/StockCharts. Take care, everyone. And again, enjoy the new springtime. Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.